Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Hello everyone, stock traders, ETF traders, and I just wanted to, and index traders, I wanted to show you this layout that we use over there in the Forex room for particular momentum identification. What I've lined up for these four charts, or this quad chart, is the ability to line up the daily season with the weekly season. And hat tip to Danny and Rick Wise for programming one of the two candle rules to show where momentum is going with respect to each currency. Now you may be asking yourself, why am I listening to this video as a stock trader? I don't trade the Forex and that kind of thing, but what I found here was the ability to apply this layout in determining momentum that we use in Forex for all the stocks and ETFs that are out there. And let me show you, I first orient you to the quad chart here. In the top right, I have the daily Heikin-Ashi. Heikin-Ashi just means average price. I use that to try to cancel out the noise with particular price action. So instead of seeing green and red, I get green in terms of the average price moving up. And it allows me to focus on where price is going overall on the daily. I also have it for the weekly over here in the top left quad chart here. So this is the weekly Heikin-Ashi candle along with the RL10, where Danny has programmed the color of the seasons in with the RL10. So we got spring and summer here, so nothing but up for this particular currency. Down in the bottom left, I have the actual price action candles with Ken Long's Bollinger Band regression line bundle there. And this is available with the KL bundle. So if you're interested in obtaining this layout, go ahead and email Danny for this particular layout. Now let me orient you to what I saw in the actual, as far as the similarities. So as you can see here, this is the weekly bias as it goes with the Heikin-Ashi and with the season. So this, we definitely have a long bias with the Heikin-Ashi in this. This is the Heikin-Ashi bias on the daily. This would be considered a long entry, and what that means is for a long entry on the daily would have to be two green candles north of the RL10, right? So they have to be north of the RL10 in order to get this long bias entry for this. For a short bias entry, we don't have one here, but it'd be two red candles south of the RL10, right? So it'd be two consecutive red candles south of the RL10. What that tells us is where's the momentum that it's not retail traders taking a price action, it is the big banks, hedge fund managers that are taking price down for a particular reason, and that's where the market makers are sending price. What it shows is where the price is actually going. In this case, it's going to the long side. And then we have the average true range that Danny has set up for quiet consolidation in terms of average true range on price, normal, average true range or price action, and then volatile. And then the daily seasons represented here. Summer is green, fall is blue, winter is red, and spring is yellow. Now, okay, this is for the Forex currencies. Now let me get you something that is a little more recognizable here. Now if I want to go ahead and check out the S&P 500, it goes ahead and lists the entire S&P 500 here for this particular layout. So what I first do is I first order the price from low to high, because I want to know what are the lowest stocks and prices that I could go with here. Then I go towards the weekly bias. I click on the weekly bias to order it by weekly bias because I'm going to look at longs here. And if you're trading a retirement account, this may help you identify which stocks that you would want to focus on in terms of trading. Not only swing trading, in this case this is a swing trading setup, but if you want to focus because you understand where the bias is going on the swing, you may focus your attention during your day trading sessions. So initially I look at the longs here, daily Heikin-Ashi. I click on summer to order the summer, then the spring, because both spring and summer are up. I click on the long, and then I also click on normal. It's quiet consolidation. I want to kind of avoid those if I possibly can. And so what we start to see is certain stocks that have a bias to the upside, both on the weekly and on the daily. And I'm going to go through these. You have Juniper Networks. As you can see here, actual price action went up. Is this a stock that I would go ahead and buy after 2 green candles north of the RL10? Yeah, I would consider that, because on a swing trade. What I don't like is the excessive gaps or close to the Z3. So when I consider a potential long on a stock, it would have to have distance to the Z3 before I would consider it going long. CTVA, same thing. This gap was a little high. I wouldn't necessarily do that. I'd like to have 2 green candles north of the RL10 that are really close to the RL10, which shows significant up movement or momentum to the up movement, or slow momentum to the up movement. Because if you think about it, the hedge fund managers and big banks, they want to slowly get into their positions without causing erratic price action movement to there. Now this may have been because of news, but this is what you'll see, is you see a slow or gradual uptrending move or momentum move. That is the daily aligned with the weekly. Here's another one. As you can see right here, these are 2 green candles north of the RL10. Usually I like them successive. I like price action in succession as it gradually builds to that. So this green candle high I like lower than this green candle high. And as you can see here, it still moved all the way up there, so you could have traded that during the day for a nice gain. These 2 green candles were both Thursday and Friday. You just continue to look through these. It's a nice one here. You had a potential doji here as a high, came up, continue to move up. CVS, not a bad entry here. 2 green candles north of the RL10, both in succession of higher highs and higher lows. And as you can see here, some potentially nice gain. And as you can see, I order it here in terms of price so that you can gauge how many shares that you wanted to go ahead and enter for each trade. And if you look through all of spring, some nice gains for those stocks. You go through summer, again, nice gains. Now here is a nice entry right here. We got higher highs, higher lows. Right here, it turns to spring, and look at this nice gap up just before it hits the Z3. This would be optimal in terms of an actual trade. Just understanding momentum. Another good one right here, 2 green candles north of the RL10. Really close, higher highs, higher lows with respect to the bodies. And look at this nice price action all the way up through the 200 moving day average. That was pegged. Healthcare sector, this was another good one. This was another good one. Monster Beverage, and 2 green candles north of the R10. The green bodies, higher high, higher lows, and look at that. Right up to Z3. Again, more momentum to the upside. As you can see, overall price action to the upside. The daily Heikin-Ashi show the gradual momentum to the upside, and this shows daily price action, actual price action. So just to gauge it there, if you picked any one of these for a particular day trade and all that, now you understand where the daily and the weekly momentum is headed for any one of these stocks in the S&P 500. And you can go all the way up, and it shows all of the stocks in general succession. So this is a nice scan for the longs. Now you may be asking, all right, can I do the same thing for shorts? Yes, if there is significant price action to the downside. If we look here, click on, there is weekly bias to the downside. No real Heikin-Ashis to the downside. Let's see if there's any shorts. No shorts at all that were for these stocks. All right, so if you look at this, there was no momentum on the 2 candle rule, 2 red candles south of the RL10 to go to the downside. All of them were long. Right, so this keeps you on the right side of trades for the S&P 500. Now if you want to look at the Dow Jones 30, you can do the same thing. I think there was any shorts for the Dow Jones 30. Nope. And what we see here, Verizon was a good trade for the week. Intel, another good trade. IBM and HD, Home Depot. A 2 candle check mark didn't happen to here after that initial move. So what this does is it gets you into trades early if the 2 candle rule is close to each other here. For this instance, Intel. Going for NASDAQ 100, long bias, summer, sort by price first. Long bias, Heikin-Ashi, summer, spring, long, and normal. What you see here, we have Intel, XL Energy, CSX, good trade. This is a very good one. Look at this, 2 green candles north of the RL10. This is the initial indication here. We're both in green with the summer season, and look at that nice price action to this, going higher. Another one, Heinz Company, Kraft Heinz, initial entry order here, continue to go up all the way up to the Z3. For Monster Beverage, we already covered that one. FOREX, Seattle Genetic, another good one right here. 2 green candles north of the RL10, gapped up and went higher. Another good one. Higher highs, higher lows. Again, another momentum going to the upside, both on the daily and the weekly. Algen, Amgen. This didn't trigger until today. This was fall season. All right, so we look at NASDAQ. We can look at sector indexes and industry indexes if you want to, or U.S. indexes. Sort by price on the index. Do shorts for this one. Weekly bias to the downside, Heikin-Ashi to the downside, winter, fall, shorts, normal. And what we have here, volatility index, trend. You got different indexes showing that volatility is going to the downside. So if you wanted to short the VIX at this point, this could have been a good trade on the ETFs. VIX, all VIX is going to the downside. I'm going to go ahead and look at the longs. Go ahead, that daily Heikin-Ashi, summer, spring, long, normal. Paper, forestry and paper, each one of the indexes can be done in communications, all of them, right? So this shows us momentum via daily spring or daily summer with the green and the momentum of each one of the indexes. So I thought I'd offer this particular set. So all I do is hit the down arrow, and if you want to look at a particular set of stocks in the NASDAQ, S&P 500, Dow Jones 30, or even the high cap 1000, you can go through and determine what the momentum is for those particular stocks or sectors. Okay, so long, short price, Heikin-Ashi, long, summer, spring, long, and normal. And as you can see here, you have a plethora of stocks to choose from that fit your criteria and your categories that you would like to trade. Also considering margin and the amount of shares that you want to trade per stock. So again, hat tip to Danny Inyar and Rick Weiss for programming the daily seasons married up with the weekly seasons and the Heikin-Ashi in terms of average price and momentum of price. Kind of gives us a nice sight picture on where to trade with our bias initially when we either trade the swing or if we trade day trades. Hope this video was helpful. If you have any questions, don't hesitate to email me. I'm both on LMS and I'm also in the FOREX forum. And remember, ruthless risk management. And I hope everybody has a great weekend. Well, if you like this video, go ahead and hit the like button below and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.